But in the thick of earnings, a lot of earnings as well that the market is reacting to. So let's take stock of IDFC First Bank. We have with us the MD and CEO, Vaidyanathan, joining in on the show right now. Vaidya, hi, good morning. Good to have you on the show. Firstly, I just wanted to understand, how the quarter went by was and how the synergies of, transforming retail into digital are really panning out for you.
Well, I think it was a very, very good quarter for us. I think all parameters did well. Our net interest income was high and our margins have now become close to like 5.9%, which is pretty good. Our core profit was up quite strongly. One of the key things that have happened to a bank over the last 2 or 3 years is that the core operating profit of the bank has now become, like at merger it was 279 crores. Today it is more than doubled in 3 years to touch close to about 650 crores. So I think, the bank is looking pretty good now.
Sure. The one thing that I observed though, Vaidya, is that your losses in retail liabilities are still very large. What explains that, and do you have visibility on these coming off?
See, when we started, maybe 3 years ago, at that point of time, we had a large loan book from IDFC Bank, and we had capital first. So both were assets. Nobody had liabilities, retail liabilities. So we had to quickly deal with that issue. So we went ahead and put up close to 400 branches and 600 ATMs and everything. So all that came at the cost of raising liabilities and had to be done. Now the game forward from here on is that these branches will start becoming productive. We start getting CASA branches, CASA balances, that adds to profitability. We start doing cross-sell, that adds to profitability. So this is the way any bank, when it starts up, has to incur the initial expenses. So you're right, retail liabilities still costs us about 325 crores to 350 crores a quarter on the negative side, but the retail asset side is extremely profitable. We have about an 80,000 crore book, and by our estimates, we're making between 18 to 20% return on equity on an incremental basis. Like that's pretty strong. So, but this loss will on the liability side will come down with productivity.
Morning, Mr. Vaidyanathan. Nikunj also joining in. Now that the cross around your balance sheet, which historically has been Vodafone, is behind us, for FY23, can I assume that the credit cost at an aggregate basis, at an overall basis, will start coming down, because that changes your return ratios completely?
Well, it completely changes the game. I agree with you. Last, couple of years we had one or the other account coming from infrastructure or whatever. But the main thing you should know that you should forget this word called legacy. I'm very happy to say that. I think almost it's all done, closed. I think next year we practically will start with a pretty, clean book. And now we are feeling very confident to guide that next year's provisions for the bank will only be 1.5%. And that is really a big deal, I think, in the development of the bank.
So the broader message from you for your shareholders and or for our viewers is that the legacy accounts are behind us, you've expanded a lot, and a new credit cycle has started.
Yes, absolutely, that's the message. The key message is actually how the earnings have increased. I talked to you about how operating profit has doubled since the merger. The other big thing is that so we believe that from here on, if you peep into or look into 2023, you should expect to see two significant developments. You should expect the income to continue to grow. You should expect the bank loan book to grow by maybe 18 to 20%. Earnings, the income to grow a bit faster than that, and credit cost to come down over this year. So, what in our language we call the opening of the jaw, meaning the profitability jaw. I'm really looking forward to next year. I believe it will be a very significant year. I've been through this before in my previous organization and the organization before that. It always is like that. The first 3 years, when you start from a zero base, you have expense but no income, but that curve turns. And when it turns, you get to see the profits coming through. I think 23 will be one such important year for us.
Not for just IDFC, but in general, when do you see that this high uptick in inflation could start putting stress on the retail book? I mean, that's a concern which we now get from a lot of analysts who track financial. They're saying, look, corporate cycle is great, SMEs come back, but with this kind of an inflation, and especially stress on the rural India and the semi-urban area, it's a matter of time retail delinquencies will start. Is that a real worry, or that problem has been blown out of proportion?
No, actually, honestly, I don't agree with that comment. Actually, in the sense, I'll tell you what, 50% of the retail book in India is home loans. And in home loans, as you know, people have a lot of margin and cushion in the LTV. And also, even if the interest rates were to go up, most of them are floating rate loans. So usually the tenor of the loan will get increased. But the EMI stays where usually they are. And if EMI doesn't change, people normally don't default. Now, as far as the other business is concerned, I think that India has really evolved a lot from then. People are largely under-leveraged in this country. You know the credit GDP numbers. So I think it's not that much of a big deal. People are very concerned about credit bureau these days. I'm sure everyone we know is concerned about credit bureau. They keep looking at it like a hawk. So I think the overall guardrails in the country have become far better. And I've been through this. I've been in this business for a really long time. I can tell you that it's very diversified.
Vaidya, as I dig through your numbers, I understand that your infra book continues to remain a drag on your asset quality as you go on increasing or recognizing NPAs. What's the visibility here? When can it snap out of the woods?
I think it's already snapped out. In the sense that, I made the opening comment that you should forget the word legacy, you should forget the spelling of the word legacy on the lending side, because it's done. We have close to about 8,000 crores of book now left, but this is the clean book. You see, we have a couple of toll accounts which went NP in the last 2 quarters, but we believe all that will also come back. So let me just say that don't bother about it anymore. You should now look forward to how the retail portfolio continues to behave from here. Our trends on retail continue to be, if you see the last 3 quarters, every quarter the gross NPA has come down, net NPA has come down. Now we are guiding for gross and net NPA to come down 2% and 1% going forward on the retail side. Should more focus there. I think corporate side, we don't have much problems left. Infrastructure, apart from whatever is already disclosed as NPA, nothing more is to come.
Retail be a high growth segment going forward?
Yes, and within retail, home loans is growing by 44% year on year for us. And you can see, of course, it's not just for us. You can see how home sales in the country are doing at this point of time. So that's a big growth area here.
Very basic follow-up question, Mr. Vaidyanathan. Everybody is curious to understand the merger timeline. You've shared it with analysts, but just for the benefit of our viewers, if you could just walk us through.
We're not making any more fresh comments on the merger at this point of time, apart from whatever is publicly announced, in the sense that, the Limited has expressed an interest to merge. IDFC Bank has said that, look, we will look at it positively, but that's where it is. Frankly, there's a lot more to cover ground because we've got to work out a lot of details in this case. There are timelines involved, so it's hard to really put a timeline or details for how the events will take place from here.
I'm not trying to put words in your mouth, but if I say, let's say in FY23, there is a possibility, not a probability of this merger going through, will that be a tall order?
I really can't comment on that, Nikhil. Like I said, whatever is publicly announced by the two boards, I'd like to stick with that.
I appreciate that. The curious journalist in me will always like to understand more from you that now that we have you on the show. What are you expecting from tomorrow's event, the budget?
Well, the expectations, I think, are pretty straightforward. I think, there is infrastructure will be a big deal. I think agriculture will be a big one. Rural will be a big one. Housing is always a favorite for all budget makers, so I think that will be a big one. But those are the expectations. My own wish list is apart from all that. It's really, I've been actually wishing that small entrepreneurs up to a certain income, maybe a crore or something like that, should actually be tax-free. It should actually be a progressive tax. You know, all the shopkeepers you see on the roads, if all the taxes were literally nil to start with, and of course, large corporates like us can pay our taxes. But I mean that if it's progressive, I believe that it will make a really big deal for the country. You know, what I meant was 0, then 5%, then 10%, then 15, then 20. All small entrepreneurs will get a benefit. I am a big champion of small entrepreneurs, and I think that and someday, this time or next time, I'm looking forward to it.
Okay, well, they're always good speaking with you, and thank you so much for taking the time out and chatting with us today.
Thank you, and thanks to Nikunj also. I want to just share with your viewers that you've been watching this bank for 2-3 years. We thank you for your trust that you've kept with us. I just say that the next 2 or 3 years will show you the benefit of the foundation we built. I think it will show in the next 2 or 3 years. Thank you very much for that.
Okay, pleasure all ours. That's the word coming in from IDFC First, 1.5% higher for the markets, 200 points strong. So that opening gap, at least for now, is holding on, and all sectors are contributing to today's move. On that note, we're going to take a very quick break, but come right back. Lots of other corporate chat lines.